We'll go through the notes here real quick. As you can see, it's not clear what is going to happen. I mean, they expect it to be good, but they don't really give you too much insight. So, going through the notes, Georgetown, Texas is now fully operational. We knew that. But late in second quarter, so they were saying they were starting June, beginning of June, which I don't know how if they consider that late. To me, late in the second quarter for full capacity makes me think that they were even later than the beginning of June to get to full capacity. Because having an entire, like a third of the quarter, like a full 1/3 of the quarter, doesn't seem that late. So it'll be interesting to see what data systems integration will be. Excuse me. It's like they did go up from 7.5 to 9.5 million in systems integration. So, they made $2 million, 25% more in that segment with barely any capacity really being online until late in the quarter. So I would expect to see, let's assume they had it the whole month of June. They get another 2 months, they make another 4 million. So they're at 13.5 million in systems integration. That would be really good. What did they say? They're like 30 to 40% margin there. If we take the low number, you're looking at roughly 4 million in net income for that segment. That's really good. It would be higher than they just reported for this entire quarter for everything. Again, this is why having more revenue in this higher margin business is so important to them. And they do add color on where they think that's going, and we'll get to that down here further down. Yeah, no one cares about year over year. If you're wondering why this 100% number, 200% numbers they keep throwing out aren't like got the market super hyped about this, it's nice that they did so well year over year. But the market's more of what have you done for me lately? So quarter over quarter is really what they care about. Procurement was up year over year. Sorry, can't help. I'm still yawning. But it was down 66% quarter over quarter, and this thing is trading at like an 80 multiple, and that ain't gonna do it. So that is not growth. They mentioned variability in procurement. No shit. Systems integration was up 25% quarter over quarter. That was much better, as we talked about, and that was with limited use of the new facility. Other segments I don't really care about right now. They make less than 4% of the revenue. Another good question would have been to ask how much of this modular data center expansion they can support. Like how much of this can they actually get into, and how much can that segment grow potentially? Like, is it always going to be less than, is it going to be less than 5-10% of revenue, or is this something that can grow to be 20% of the revenue, right? And if it does, like how consistent are these? Like, is it like procurement where quarter to quarter it's going to fluctuate a lot, or would it be more consistent business? And what is the margin? Like, is it high margin? Like, which I think he may have said it was high margin, like systems integration is, or is it low margin, like procurement? I mean, this would be important, They said there will be some additional projects later this year that were deployed previously in the prior years. So it sounds like they'll have some more income that wasn't in the first half of this year showing up later in the year. Systems integration, they kind of harp on this. They're expecting it to grow a lot from current levels, not just this year, but like going forward. And that's what we want to see, like we talked about. Because of this, margins were back to 17% from 9%. Again, due to higher systems integration margin, and they generated more money in that area, and they had a lower mix of procurement. So procurement was a smaller number, so the margins went up just because of that. Gross margins, yeah, we were just talking about that. They said it was over 40%, or systems is still 3 to 4%. SG&A, so these are their like administrative fees. They were 68% in quarter two. They were actually down from quarter one. That's nice. But they still had higher headcount. and they had more in stock options. And you see that they talk about later on that they increased stock-based compensation was up 100% in this quarter, but they hired a lot of people, so that's probably part of it. I'd be curious to see like what kind of comp they got and how dilutive that'll be, because those are shares that will eventually, or those are options that will eventually turn into shares and dilute current shareholders. Um, there will be an acceleration, an accelerated filer. They need to be an accelerated filer by the end of the year. So that's what the BDO or whatever, the new auditor, it just means they need a more robust auditor. And so it's going to cost them more money. But that's good because that means they're growing up into a big boy company. Depreciation, amortization. So this went up, but that was really just because of the new facility. We knew that was going to happen. And it will increase again in Q3. So there's going to be even more of a headwind on that front in Q3. Operating income will exceed. We already talked about this. So they're going to make more in the first than that they made in the first half of this year. They did talk about maybe subletting Round Rock or using it for other operations to increase revenue, but they said that's not going to happen this year, so don't count on that. Interest expense was double this time, mostly due because of the new construction loan, right? So this is a headwind that they'll have going forward. They're going to have this loan that they're going to have to pay off, monthly. So you're going to see 3 months of loan payments show up every quarter. That's going to go against their revenue. Well, not the revenue, but their net income. They did say this was partially offset by cash on hand that they have. So they are getting interest from that and then paying some of that interest that they get back into the loan. But that will, unfortunately, as the Fed cuts, that number will actually come down because they'll get less interest on that money. I'm sure they're doing some kind of short-dated federal fund, like not a 10-year, but like a 1 month. God, I'm just drawing a blank. I'm super tired right now. A 1 month bond or note. They talked about the EPS being 0.06, which was the same as the same quarter last year, but it's 50% lower than Q1. So Q1 was like 0.12, and I was expecting over 0.12 in this quarter. So that was kind of sad. We already talked about stock-based comp. We already talked about additional discrete projects in the back half of the year that's going to increase revenue. 4.6 million of net income year to date. It's probably going to be close to that in the second half. So you're looking at 8 to 10. You got to think the second half they're paying more into the loans. So they're going to be making more in revenue. They're just going to be taking away roughly the same amount because of expenses increasing. 36.8 million cash and cash equivalents. And then they have a 5 million bank loan. It sounds like or 5 million cash they're using as collateral for a bank loan. They're actually going to tap into and get that $5 million out. I wonder how much of this is, and then the S3 that again, no one, like these people on this call are so stupid. Nobody asked about the S3. Like they have $150 million worth of shares that they could dump onto the market, at the money if they wanted to. And no one asked about it. It's already approved, so they can do it whenever they want to. Anyways, I digress. But I wonder how much of this money, and then maybe that S3 is for this new level tech that's out there that they could use to get a new relationship outside of Dell. I think it might be worth it for that, right? If they can get a second partner, especially if it's someone like AMD, if they have to dilute a little bit to get the money to do that. 31.6 million in debt through the new facility that they had to pay. So pretty much all of their cash is now, once you take out the bank loan that's being held, I mean, it's basically their cash to debt is like 1-to-1. There was run over due to racks requiring more power. So originally they thought this was going to be 20 to 25 million, and it went like $5 million, $6 million over budget. I wonder if they have to keep chasing this right up. So it sounds like these racks are already requiring 13 kilowatts, and they think it's going to go up to 1,000 eventually, like but they're saying it's happening so fast, right? They started building this and they already had to increase what they thought they were going to do while they were building it over like the past 6 months. So like 6 months from now, is this going to be outdated again? And they're going to have to do it again and like just keep doing it over and over again, kind of like GPUs, like get more powerful and more powerful. And if you like you want the latest and greatest, you have to keep replacing them. So we'll see. That was a little concerning in my opinion. So yeah, run over. They need more power. Also, I wonder if this is the other thing the S3 could be for, is so they can keep up with this. It's unknown how upgrading this power capacity will convert to revenue. In my opinion, they say they expect it to um, convert to additional revenue, but there's really nothing to say that that's a sure thing. Monthly payments till 2030, where he talked about this. The last call, I swear, I thought I read or saw that they said they would pay this off over 2 years, but it sounds like this is more of a 5-year payoff period, which is kind of an interesting shift in that. Q3, they do get 6.8 million, or they might get 6.8 million back from landlords for the improvement to the facilities, because they're leasing this. So it's kind of like all these improvements they're doing is at their cost. The landlords ultimately own this facility, so they're doing them a bit of a favor. So that 6.8 million will be nice to go into their balance sheet. I think they'll just put it into their cash on hand. I don't think they'll count this as income. Closing comments from the CEO. Georgetown facility, they're leading IT OEM, which their leading IT OEM is Dell. They can't say their name legally on these calls, which is so stupid because everyone knows who it is. I talked about will they continue to chase power and like how does this hurt their margins? They say in the next 12 to 24 months, the new facility will be more important. So expect the use, I think, of this facility to pick up over time as these companies need their help. At least that's their expectation. They claim that they can see better now into end of year, which is why they went from 50 to 75% EBITDA. They will later say that 75 cents, or they did say later in the call that 75% is their baseline. So I think they're kind of hinting that it's going to be over 75%, which is why I think you'll probably see north of $10 million in net income for the year, where right now they're just projecting 9.2. And that's what that guy was asking about. So the Q&A, this part sucks. They need better analysts and better questions. The first dude actually asked some decent questions, but that was about it. TSSI rank on Dell's list. There's really not an answer here. This is probably a question they could have just not done. They want to make themselves number one on their list. Whoop. Organic growth is, just existing relationships. So this was a good question he asked on this, and it has nothing to do with new clients. Outside of this, there are ways to expand. They list a couple of things on like working on site at customer facilities. They talk about a resale market, and they could do the integration work for. And the channel partner would just use them. They mentioned using the old facility. It sounds like possibly for new work, and the new facility would just be for Dell, Microsoft, and whoever their other existing customers are. So they really are trying not to like ruffle the feathers of the people they already have doing workforce. It sounds like they're on pins and needles about that. We talked about this new level tech that's out there. So that's their call started again. That sounds more promising to me. It sounds like if Dell is fine with it, which they should be, if it's something outside the scope of work that they do for Dell, that this is something I need to know what this is. Like as an investor, I want to know what this is. That should have been a question that the guy asked, like as a follow-up, is like, what the hell is new level tech? I think they couldn't say what it is because it might give away who they would do work for. Something to think about. Guy asked about the procurement. This was a good question. How the hell you figure that out quarter over quarter? They think procurement will be higher the back half of the year. Yeah, it'll have to be, because if they're going to beat the $140 million that they made in the first half, they ain't going to be able to do $30 million in procurement for the next 2 quarters. They're going to have to do more like $60 million in procurement each of the next 2 quarters. They say they hope that you'll be surprised again like we were in Q1 someday. I don't know that necessarily means we'll see over 90 million, but we'll see better than we just saw. They say you can compare it to figure out what this is. You can compare it to configuration services. We talked about this during the call. They lump this into systems integration, so we can't even really see what this configuration service business is to get an idea of what procurement will be. So for the investor, it's pretty useless. Again, they reiterated guidance is at least 75% more than last year. And that would be, the guy was trying to say that would be break even with the Q2 for the next 2 quarters on average, which I think he meant first half of the year over the next 2 quarters on average to get to that 9.2 million. So that was it. The earnings call summed up in a nutshell. The only thing that really piqued my interest was this new level tech and what it could mean. They said that they kind of hinted that we might be surprised again one day on those procurement numbers. It was interesting to see the systems integration is up 25% quarter over quarter, even though 25 or 26, so they might have said 26, even though they only had the new facility up and running late in the quarter, whatever that means. The other interesting thing would be if they could sublet Round Rock to do maybe not just sublet it for someone else, but if they could use that facility to support, someone else, that it doesn't interfere with what Dell's getting and their current customers are getting at the new facility. I think that's something they definitely need to explore. And yeah, the concerns, there are plenty here. Having to chase that power for these new rack integrations, like, are they going to have to continue to do this? They have a lot of debts, so they are going to have headwinds on the debt front for a few quarters. How they manage that'll be interesting. What are they going to do with that S3? Like, are they going to tap it? What do they need it for? Like, do they need it for this new tech? Do they need it for paying off the facility? Like, why is it out there? Someone needs to ask that question to management. Like, why have you had this approved since July the 1st or 2nd and haven't used it? Investors should know that. And the stock-based comp, I probably would have asked about that. 100% increase seems like a lot. I mean, they did just bring on a new facility, so they might have hired a bunch of people. But I think I would have asked, like, is that something we continue? Like, should we expect to continue to see that or not? Anyways, those are my thoughts on the call. Overall, the quarter was fine. Like, it was okay. If we cut over to the chart just to see where we're sitting right now. Stop screen before I go to bed. I'm so tired. This is what it looks like right now. We're back to levels not seen since 8 days ago. So I'm not that worried. Like, if it holds 20, I think that's fine. Like, I'll start to get worried if we lose 20. This earnings wasn't bad enough. Like, it wasn't bad. It just wasn't what you needed to see if you thought this thing was going to go to a new all-time high. It was kind of meh, to use my namesake. And we fell out of our wedge here, which kind of sucks from a TA standpoint. Like, if we don't recover this, like, immediately, you're probably going to see this thing bouncing around down here somewhere near 20 until the next earnings. I mean, it is what it is. If you have short dated calls, I feel for you. This is exactly why I don't have short dated calls. I have shares from way back here, down here somewhere. And I do have calls. I actually bought calls here in this dip, but they're for March. So yeah, I'm going to lose all of the gains I had in those, which is fine. I have almost 3 full more quarters, like, for them to put up or shut up on those numbers if they really think the back half of this year is going to be as strong as they're implying. I think this will recover. So we'll have to see there, Like I don't think unless some analyst steps in next week or the end of this week and like starts hyping this thing, I think it's just going to be chill for a while. It'll definitely move still with the market. We're seeing, back here, like day to day, we're seeing like 10, like this was like a 10% drawdown and then right back up 10%. It's a small cap. Right now, it's probably getting back close to $500 million market cap. For a company that's going to generate $280 million in revenue this year and actually be net income positive, $500 million market cap, which I think is what it is at $20, is still a steal in my opinion, especially if they think that growth is going to continue into 2026. And then at the end of 2026, I'll start to worry because their Dell relationship, their contract starts to run out for them, and at that point, they need to have some other. They need to have a backup plan for Dell, and it sounds like they can't really do that, and they're stuck under Dell's thumb to some degree. But that's it. That's it for the Q2 earnings. I know it wasn't what people hoped for, but it was okay. Yeah, it was kind of meh. That's all for this one. Appreciate your time. Y'all take it easy. Peace out.